Ever wonder how much stock there will be in Tesla at the end of the year? Numerous forecasts, both optimistic and pessimistic, exist regarding the stock price of the EV company by the end of 2022. There's no way you want to miss this. Gary Black has strong thoughts on Tesla, the pioneer of electric vehicles. Black has been employed on Wall Street for a long time as a fund manager and Wall Street analyst. The managing partner and co-founder of Future Fund LLC, an SEC-registered investment advisor dedicated to making growth equity investments in businesses that are transforming the world, is Gary Black. Gary has held senior management roles at some of the most reputable international investment management companies for almost 30 years. Black claims that given that Tesla is currently valued at $1.09 trillion based on earnings per share of $100, its market capitalization ought to be $4 trillion. He sets a price target of $3,000 based on a 30 price to earnings ratio. He went on to say that Tesla's market valuation would hit $4 trillion if 1.4 billion shares remained outstanding. According to Black, the percentage of electric cars in the automotive industry will reach 60% by 2030, with Tesla expected to hold a 20% market share. Given that global light vehicle sales have reached 85 million units, he predicts that Tesla will be able to deliver about 10 million vehicles annually by the end of the decade. According to Gary Black, Tesla shares may reach $1,600 during the next 6 to 12 months. The portfolio manager of the Future Fund anticipates multiple opportunities for Tesla in 2022. Black claims that since Tesla is predicted to increase sales by more than 50% in 2022, the stock is inexpensive at 50 times earnings. In contrast, Black projected that in 2023, after the August 3-for-1 stock split, Tesla stock would trade at $500. In a similar vein, Dan Ives of Wedbush reduced his price expectations for Tesla stock, lowering them from $1,000 to $306 after the split of the stock. After manufacturing at its Shanghai plant was stopped in May, the EV company's stock fell precipitously in the following months. This was mostly caused by problems with the factory supply chain, which resulted in a number of challenges. Elon Musk, the CEO of Tesla, is optimistic that the company can continue to create a record number of electric cars during the remainder of the year. However, there can be unanticipated difficulties to take into account in the future. However, the announcement made by American car rental business Hertz about its substantial acquisition of 100,000 Tesla Model 3 vehicles was really good news for Tesla stockholders. Following that, supporters of Tesla anticipated a spike in the company's stock price, which regrettably did not last long. Nevertheless, Hertz earlier this year added Tesla Model Ys to its expanding fleet of electric vehicles and declared its intention to begin receiving delivery of the 100,000 Model 3s by the end of 2022. Additionally, Hertz agreed to provide Uber drivers with 50,000 Tesla electric cars. The fleet of Tesla vehicles that the auto rental company has been adding will help expand Tesla's user base and increase its appeal. In other news, Musk disclosed that Tesla intends to provide fresh FSD feature improvements by the end of the year. Tesla published FSD Beta 10.69 earlier this year, and it included a number of noteworthy enhancements over the prior version. Shortly later, the business published version 10.69.1, which included further functionality. Tesla is expected to release FSD Beta 10.69.2 within the month, according to Musk. Via his Twitter account, Musk clarified that while the upcoming and possibly final version will have fewer code changes overall, they will have a substantial impact on the driving experience. Because of growing concerns about the state of the world economy, several analysts cut down their prediction for Tesla's stock price to $398. New Street Research has a $530 post-split price objective for Tesla. Morgan Stanley has $383. Argus has $374. Bernstein has $274. Bernstein has $290. And CFRA has $415. And CFRA has $415. The prediction for Tesla stock after the split is $398 overall. Some believe that since there seems to be an increase in global uncertainty over the coming weeks, Tesla stock will certainly lose value. Given that petroleum prices have increased by 10% since August's monthly low, inflation is probably going to increase more. In addition, the crisis in Ukraine has brought most of Europe's economies dangerously close to a recession, raising questions about wintertime heating supplies. Furthermore, China's real estate market is in a severe crisis that might have a cascading effect on the banking industry. With so many unresolved issues and growth figures that have been cut in half, Tesla's 104p is unlikely to hold steady. Nonetheless, analysts are hopeful that during the following 4 weeks, additional information about the world economy will become clear. Regulations, fees, fines, competition, interest rates, and other economic considerations are some of the elements that are detrimental to Tesla. The mindset of ordinary investors is altered to book profits in high-growth equities and move toward less costly ones due to fears of rising interest rates and the Fed's announcement of bond tapering. This could affect Tesla's 2022 projection, even while Tesla is without a doubt the market leader for electric vehicles. Globally, a number of rivals are lining up to challenge Tesla. Among them are Ford, NIO, Lucid, and Rivian. Nonetheless, a lot of people think that Tesla is still leading the electric car market right now. Nevertheless, authorities haven't exactly been fond of Tesla lately, which might be problematic for the car maker. Since many Americans disagree with China's plan and more regulatory inspection, to put it mildly, has an impact on cash flow and production efficiency, there may be a number of fines and fees associated with Tesla's development plans, not to mention possible monitoring. Positive aspects for Tesla do exist, nevertheless, such as the Starlink initiative, the business's rapid output, its connections to China, and its recently established gigafactories in Austin and Berlin. Elon Musk has been working on the Starlink project for the past few years with the goal of using a network of private satellites in orbit to bring internet access to even the most distant areas of the planet. In 2021, it accelerated, and Starlink can today take pride in having more than 2,000 satellites. Musk stated on Twitter that the Starlink IPO would be advantageous to Tesla stockholders. China is a significant market for EVs in general and Tesla in particular. Estimates indicate that in 2022, 40% of the EV makers' deliveries will come from China, adding around $400 to its share price. China's market can provide Tesla with significant benefits if it is managed well. The newly constructed gigafactories in Berlin and Austin are intended to significantly increase output. It will expand Tesla's reach throughout the world and enable it to generate 2 million units a year instead of the current 1 million. Tesla's share price has soared by almost 700% in the last year alone, thrilling investors and devoted followers. The company's shares have soared more than 20,000% since going public in 2010, handily surpassing the performance of the market overall, often shattering Wall Street's projections and making early investors billionaires. Tesla's expansion has given people hope. Musk's company has been unable to make a profit for years. The car maker ended its first profitable quarter in 6 years and its first profitable year overall in 2020. The company manufactured over 500,000 vehicles, surpassing Wall Street's delivery projections in several quarters, and started selling its fifth production vehicle, the Model Y, ahead of schedule. Many analysts contend that the excitement around Tesla is just a bubble that will eventually burst, even with all of those potential benefits. They point out that, by traditional standards, Tesla's valuation is wholly out of line with the rest of the auto industry. With a price-to-earnings ratio P of 1,200, Tesla has a $1,200 market capitalization for every dollar of earnings. In contrast, General Motors has a P of 17.84 and Ford has a P of 22.74. Wall Street analysts who were dubious about Tesla's valuation pointed out that the company's margins aren't all that different from those of the industry as a whole, and that Tesla will undoubtedly face more competition as more automakers get into the electric vehicle market. Industry observers, however, disagree over Tesla's future. While some believe it will rise much further, others advise investors to stay away from it completely. An analyst from JP Morgan stated in a note to investors late last year that the stock is mostly driven by speculative frenzy. You can play with the numbers any way you like, but one or the other of the required assumptions still seems very difficult to conceive in any imagined scenario, the economist stated. Tesla shares are, in our view, and by virtually every other conventional metric, not only overvalued, but dramatically so. Although there are differences in the overall valuations of Tesla stock, most of them point toward a lower valuation because of the global economic problems that are impacting the stock market as a whole. To find out the price of Tesla stock at the end of 2022, subscribe to this channel.